Okay, we are live. So this is Noelle Randall going live talking about wanting you to understand that this is what always happens before a market crash. So we did it. I'm here. I'm live because we finally got the rate cut. So Jerome Powell, about 4 days ago, the Federal Reserve finally did the rate cut that everybody in the United States have been waiting for. We've been waiting for the Federal Reserve to cut rates that the banks pay. Okay, so it's not rates to us. Just so you understand, the Federal Reserve has been getting a lot of pressure. Okay, from Donald Trump. I'm sorry, from that administration, from our current presidential administration, in order to lower the rates that banks pay each other. Okay, that's the Federal Rate Reserve. And we just got a 0.25 rate cut, and everybody is kind of happy. Some of the investors, like myself, real estate entrepreneurs, some of us are very happy about this, but there are also a lot of concerns around this rate cut because there's been this pressure to do it all year, all 2025, and we finally got it. We had one last year in 2024, right before the election, and now we've gotten another rate cut in September of 2025 that everybody, I feel like in America, all of my friends, investors, entrepreneurs, all have been waiting for. Why? Because the Federal Reserve, of course, those are not the rates that we consumers pay. The Federal Reserve sets the rates that banks charge each other. So the lower the rates that the banks are charging each other, it does trickle down to the consumer, essentially. That's the idea behind it. And we will then see lower interest rates on credit cards, mortgages, especially, homes and automobiles and things like that. But the big one, of course, being mortgage rates. That will stimulate the housing economy. We'll see a lot more activity. That's why I'm having the Grow Your Wealth boot camp, the last one Saturday, September 7th, 2025, September 27th. Is the last boot camp. Get your tickets at growyourwealthbootcamp.com. Use code use code final50 because these are the final tickets. It is this Saturday, September 27th, 2025. So let's go through this. I'm going to give you guys, you see, I have it here. I have this all out. I want to give you guys a lesson. All right. So I want you to strap in, get your coffee. For me, get your tea. If you want some tea, go to Tea More Healthy. I'm about to sip on this tea and sit down and kind of strap in and let me explain this market crash or if one is coming. I'm going to teach you all of this. We're going to go through this and then we're going to have a little conversation at the end. And you decide, is a market crash coming right now? And if so, what are we going to do? Okay. So stay with me, buckle in, go ahead and click that like button. I got over a few hundred people in here. Go ahead and heart me, like me, tap the screen if you're just watching this on mobile, and let me give you this full lesson, okay? Let me actually sit down for a second because I got to give you, before I get into like these four patterns, because I'm going to give you the four patterns of any market crash. This always happens with a market crash. I'm going to show you the history. I'm going to show you exactly what happened. Again, Noelle Randall is a multimillionaire entrepreneur, but truly, I have been to school. I have two master's degrees, one from Penn State, one from Baylor. So highly educated person, but I'm going to give you a real world, like what we're going to do with it so you can see for yourself and you can decide for yourself, not some guru like Noelle trying to tell you what to do. I'm going to give you these patterns, some do's and some don'ts with a market crash, and then we're going to talk about, okay, so what you're going to do. Like I said, I know that you're going to have some amazing opportunities, which is why I invited you to the last Grow Your Wealth Boot Camp of 2025. Again, growyourwealthbootcamp.com. Use code final50. It's a virtual event. You don't have to leave. I'm going to be teaching about business credit, business funding, and how to use that to get assets. And we're going to talk about assets, okay, in a second, because the market crash obviously is going to affect assets in a really, really big way. You guys know that. All right. So let me go to my notes because y'all know I'm highly prepared, done a lot of research, and had to go live because we finally saw the rate cut. And I wanted to wait a few days. So I didn't go immediately live when he did the rate cut because I wanted to see kind of how the market reacted. All right. And so let's talk about how this happened. The rate cut really came because jobs creation has not been there. Okay. So you guys know that we had a jobs numbers that comes out each quarter, and then they had to revise the numbers down, and the numbers just kept going lower and lower, that there's not much job creation being created in America. Although unemployment rates are okay, the fact that the number of jobs being created and the number of people being added to payroll is not significant. That is kind of an indicator, like, let's take action. because the role of the Federal Reserve, and Jerome Powell being the chairman, the president of the Federal Reserve essentially, his role as the Federal Reserve is really to help the economy be stable in a sense. Okay, so they kind of control, obviously they're not the reserve with money anymore because that is not our economy. We do not have like a gold reserve and they watch the money. That's not the case. What they do is he watches the economy, gives interest rates to banks to kind of help stabilize if there's something going on, watching for inflation, seeing what inflation is doing, watching for tariffs. Jerome Powell has said it. One of the reasons why he didn't want to do the rate cut was because of the tariffs, and he wanted to see what the tariffs would do to the American economy, if it was going to just blow up inflation and prices were going to go crazy because we're paying these higher prices for exports. But we haven't really seen that. And now that a lot of the trade deals have kind of been inked, I think he decided, all right, let's take action. I can go ahead and do this small rate cut and let's see if we can boost up some borrowing, because a lot of times if you borrow money, just think of yourself as an entrepreneur. If I get a line of credit, I might add to staff. I can hire people. I can produce more products and sell them. I can, if I can borrow more money, I can run ads. I can get on television. I can do promos. I can get more business in. So if interest rates go down, that does make even entrepreneurs, not just consumers, but it does make business people want to borrow more money so that they can grow their business, especially when rates are low. So Jerome Powell kind of finally made this move. Again, we have been watching with our fingers like this all year. Like, when is he going to do this rate cut? We finally got it. That's a good thing for now. Let's see. So this now that triggers what I'm saying, like, because we don't have the job numbers that we want to see, and spending, they want to increase spending. So obviously, when banks put more money into the market and they spend, and you borrow money, spending increases. As the government spends money, then that actually helps the economy. But the government is usually spending borrowed money, so they want to they want to reach the president, the current president. Because again, I'm going to use YouTube rules. I'm going to start. I'm not going to say names, current president and things like that, and that administration was wanting for, maybe even to refinance some of the debt. Because remember, the U.S. government holds debt, where the U.S. government is the biggest debtor. They are the biggest debtor. They're the biggest spender. They're the biggest debtor. Okay, they have the most debt. So if you already have trillions of dollars worth of debt and you lower rate, you can refinance it at a lower rate. It makes it easier to pay. So I don't want to nerd out and get into all of these complicated things because they're not really important. What is important is these patterns that I'm about to share with you. The patterns that you need to see for a market crash. They're always, I always, that's why I put it like that. These always show. So I gave you them. There's 4 patterns. And then when you see these 4 patterns, there's things you do and there's things you don't do. All right. And we're going to get to that in just a second. So let me break this down. Because like I said, get your tea, get your coffee, have a seat. I'm going to slow down a little bit. I got my tea. I drink tea. I'm a tea person. So I drink my tea more healthy. It's a great healthy tea, helps with skin and things like that. You can pick it up for free at teamorehealthy.com. Okay. So I'm gonna drink my tea. I'm gonna sip on my tea, and we're gonna go through what always happens when there's a market crash. So the first one that you have to know, these are the 4 patterns. This is the first one. The first one that is everyone knows is rampant speculation. Okay, speculation. All right, and really what this comes from is from the first crash. All right, so number one, we really learned from the first market crash ever in 1634. Okay, it wasn't in the United States, it was actually in the Netherlands. Okay, quick history lesson. The Netherlands was one of the first to have basically a world stock market, essentially. And they started speculating with, one of the things was tulips. Okay, these, yes, tulips, the flower, TULIP, tulips. And it became all of this rampant speculation on what the tulip market was going to do, because rich people absolutely love tulips. And at one point, speculation had grew so high during this era with tulips that the average bundle of tulips cost like a month's salary. Okay, it would be like today's equivalent of a month's salary. It was the equivalent to then of a month's salary today. So like, say basically 30, around 3 grand is what people were paying for a tulip. Okay, and that's how crazy it had gotten. And then it got even worse. In today's number, some people speculate it will be over $200,000 people were paying for a tulip, because what happened is, because the market just kept going up and people were buying tulips and they were going more and more, they created futures. And we have that now where you can pay for a contract for some type of commodity and set the price, and then that price be the same next year. So you're not overpaying as prices go up. So if, for example, and we have a lot of this with wood, especially in construction, we do a lot of futures with wood and concrete and different things like that, because you will at least want to have your costs and know what your costs are and not be subject to what's going on in the market. So we still have that in today's economy, a lot of futures and speculation on what things are going to cost. And it went really crazy though in 1634 with tulips. And so at one point, the market just crashed because people were paying so much for tulips and in the future. So think about it. The tulip crop this year, they were paying for next year and 3 years and 5 years later. People were paying for 5 years worth of tulips in the future. Okay. And just speculating higher and higher prices. So eventually, when it got so unaffordable, it just crashed because it was all speculation. It wasn't actually people going to pay that. And when people started, when this crash happened, it was because they were able to easily figure out it was all of this overconfidence, and all of this speculation that prices were going to keep going up and going up and going up. And we're going to bring this back. So write this down because again, I told you I'm going to teach you this, and then we're going to come back and you're going to decide, do these four patterns show that a market crash is happening anytime soon? I want us to figure that out together. Okay. I know the answer right now, but I'm going to give it to you. I'm going to give you these four and then you decide. So I want you to think rampant speculation. What is that? What kind of things? Think AI, think crypto. Like people just speculating. What is it going to be? What is it going to be? Do we have rampant speculation right now? That is what caused the crash, the first crash that we ever saw in the history of the world with a stock market and with futures and things like that was 1634 in the Netherlands. Okay. And it was because of rampant speculation. So when we think about today's economy, like I said, there are a few things that we do rampantly speculate on. And I do think it is AI, okay, and what that's going to be and how many jobs are going to be lost because of AI, how many jobs aren't going to be created, how many people are going to be replaced, how many people. It's a lot of speculation. We don't actually know. The other thing is crypto. All right, think about that. Just constantly, is it going to go up? And it's speculation because it's not tied to any assets. All right, so let's talk about that in a second. But we're going to keep going because I told you I was going to give you four of these. So the future contracts basically is something that we saw in another one. And I'll come back another crash. I'll talk to you about in that second thing. But everything that was tied to the boom of the tulips also crashed, and that's why the whole economy started to crash. So not just did the tulip market crash, land, fertilizer, people that worked in the tulip industry, the people that sold the tulips, the people that packaged them up. Think about all of the industries that are tied to one industry that caused the crash. Okay, so that was the first one, and that was the lesson we learned. Rampant speculation is a problem. That is a pattern that you can start to see, and you know it will lead to a crash. All right. Now, let's fast forward to the coin that everybody knows. I don't have to spend too much time on at all. You're going to already be with me and understand this. The market crash, of course, of 1929, right? And we all know the Great Depression. Everybody brings this up. That's why I'm not going to spend a lot of time on it, but I'm going to tell you the pattern. What was the pattern, okay, that caused the crash in 1929? Well, very easy. It was a stock market crash. They were able to borrow money to buy stocks, and then they were able to even borrow money with these leveraged investment trusts, meaning the trust was leveraged. It was all borrowed money that bought the assets and then sold it to you. So it was so much, it was so leveraged, and then selling more people borrowing money to then buy into that trust and into those assets and into those investments. So borrowed money on top of borrowed money, all this borrowed money. But the reason that they could do all of that was what? Regulator shortcomings. Okay, so there was no regulation. So I'm going to say regulation, lack of regulation, or just say lack of regulation, okay, because there was no regulation. We didn't really have like the SEC and the FCC, it just wasn't a lot of regulation as to what people could offer to you as an investment. And then so when all of that went away, that's when the market crashed, because they started to realize that people were borrowing money to invest in the stock market, and then the stocks that they were investing in also borrowed money to get that stuff. And so it was all just borrowed money. There really wasn't too much profits and revenue and different things like that. And so people just did not understand what was going on, and all of this leverage, and they're borrowing, and the assets are borrowed, and there's nobody regulating who can, what type of things you could offer to people as an investment. I could offer you anything as an investment. I could say anything. It didn't matter. That was a big problem. And that is really truly the pattern of what caused the crash in 1929. Okay. Most people don't know about the depression, or think that they don't know why the depression happened. But it truly was, there was no regulation whatsoever on any investments. And that was kind of the beginning of the laissez-faire. You've heard of that. Like, let the market just work without any intervention from the government. And that's a problem. You want someone protecting you. You are working your job, doing your thing, on running your business. And if you invest in the stock market, you need somebody watching them. And they did not know that prior to 1929. It really started to happen like in 1907, with this laissez-faire, just let the market do its own thing. And then they added all of these different, type of investments that no one really understood, which really leads us to the next pattern. Okay. And the next market crash that we saw, which was what? In 1987. Okay. In 1987, we had a big crash in the market, in the US stock market. Still, the biggest day loss in history still exists is in 1987 on that Monday. Um, and so now let's talk about that. Okay. Because that was a little bit different. That crash was not necessarily, it definitely was rampant speculation, lack of regulation, but it was this new thing. They had these new investments that I started saying that they didn't really have the same kind of thing in 1929, these new investments that no one understood. And in 1987, there was these new innovations that no one understood. And again, no regulation and rampant speculation. So that is a problem. Okay. What could cause a rapid market crash? Okay, this is market crash patterns, just so you know, so you can keep up. In case you're just joining me, we are talking about the patterns to a market crash, the patterns that happen almost every single time when you have a market crash. Okay, so in 1987, it was really the addition of new innovations. And those new innovations were like leverage buyouts, where you could borrow money, just buy a company, and then sell it immediately. And there were a lot of people that got really rich, but it was this new way to invest. Okay, and leverage buyouts were new. And um, you kind of see some of this, and we'll get to the last crash, 2008 one, with credit swaps, and credit default swaps and different things like that, like these new products that no one really knows or understands. That's what happened in 1987. So there was all of these different innovations, and one of the biggest innovations, let's talk about that for just 1 second, was this thing called portfolio insurance, where you could basically insure your stock portfolio. Okay, because there was this new computer program. Okay, this is a new innovation. It was a new computer program that would automatically put in small sales if the market started to go down. So if your stock price started to go down, they had a new computer program that would just do a small sell of that. Well, unfortunately, the program was across the board. So if 500,000 people want to sell a share of a stock, sell their shares of a stock, well, the entire thing starts to lose its value. So they had this new innovation, this portfolio insurance, and this new innovation of computer programs that could run behind the scenes on stocks and buy and sell stocks for you. But unfortunately, everyone's kind of running the same program, seeing the same things, and everybody's selling all at the same time. That's a problem. It's like innovation that we didn't understand. And then you have new products that we don't understand. Like, let's do leveraged buyouts, for example, and let's buy Chrysler and then sell it the next day and it go up in value. So you have these new innovations that people don't understand. What did I say? AI, crypto. Those are some of the same things that we see today. Now, again, I'm not giving you the answer because they're not really publicly traded in most cases. And then we bring to this final crash of 2008, because this is the one that I think most of us here know about and live through and really learn something from. Obviously, I am in my early 40s. I ain't gonna tell you my age, but 2008 was the big one for me. That's when I lost everything. That's when I went to parents' basement. That's when I was in my early 20s figuring out, wait a minute, I have no idea what's happening. And the 2008 crash, we know mainly, so we talk about the housing bubble, but really, if we're not talking about the housing bubble, we're talking about the pattern the pattern that if we were looking, we would have been able to see. And the pattern was basically excess debt. Okay. Excess debt, a lot of debt. People were buying homes that they could not afford and they did not qualify for. And then mortgage-backed securities where they pull all of these mortgages together. So we have subprime mortgages, okay? People who don't qualify, they have low interest rates, they have low credit scores, they didn't put very much money down. They can now get a house, and they can buy more than one house, two, three, four, five houses, all right? So excess debt, they have way too much debt because they borrowed completely with no money down, bought the house, and now at the same time, the banks and Wall Street are bundling those mortgages up, which are not going to be paid because the people did not qualify, and then selling those as well. Okay. And that's more borrowed money, more debt. So it was all of this debt without the prices of homes being able to possibly keep up because it was a lot of speculation, rampant speculation. That's why the home prices were going up like crazy. Then you had lack of regulation, okay? Subprime mortgages, no one came in and said, you have to meet these underwriting standards. You should have a certain credit score. You should have to put some money down. There weren't any regulations. So it was lack of regulation. It was a new innovation, new products, no income loans, no stated income, stated assets, no income, no assets, these new mortgage products, okay? And then last but not least, excess debt. So every single crash that has been there, all four of these patterns have existed. But it's most easy for you and I to see 2008 because we were probably alive. Okay. If you're like an older millennial like myself, you really probably were affected by it quite a bit. The younger people, they will live through it, and the older people learned a lot as well. Okay. So now, okay, I'm sorry I've been here with y'all 20 minutes, but now y'all have these four patterns. All right. For a market crash. And that's why I said I wanted to tell them to you, teach them to you, and then you make your decision. And again, excess debt. I'm not saying you never borrow money. That's why I'm always telling you to borrow money in your business's name and to have a business and to create multiple streams of income. That's why I invite you to the Grow Your Wealth Boot Camp, the last one of 2025, which is September 27th, this Saturday at 11 a.m. to 6 p.m. The Grow Your Wealth Boot Camp. Get your tickets. Use the code FINAL50 to save 50% off tickets for the last tickets. And again, this is the last one of 2025. You don't want to miss it. I've changed up some of the content. We have experts speaking. You don't want to miss this because this is a great opportunity. I don't want you borrowing in your name. You can actually borrow in your business's name. And I have some do's and don'ts now that we can see these four patterns of a market crash. Now that you know historically, and I've given you that lesson, what the four patterns are, let's talk about it. Is a market crash coming right now? Well, maybe in some areas. Because like I said, without having things regulated, for example, like crypto, for no regulation, we speculate. Could there be a crypto crash? If there could be. Absolutely. Same thing with AI, because there's so much speculation. There's people taking on debt to start AI companies and using it in their names, and there's not like these proven or tried and true things. I more recommend if you have a talent or a gift or a business that you already can do, that's probably the best investment. You're investing in yourself, turning what you can do into a business and then investing in yourself. And of course, that's why I want you to come to the Grow Your Wealth Boot Camp so you can build your own business, get your business credit, get your business funding, and have all the funding that you need. Okay. Use code FINAL50 to save 50% off tickets. Again, you don't have to leave your home to come to this event. It's live streamed in a studio. It's interactive. You can ask your questions. We can chat. It's not like a live stream here on TikTok or on YouTube. It really is more interactive. And I can say a lot of things on my live stream that's private that you pay for versus what I say here on these free platform. So let's keep going because I want you to be prepared. That's always what Noelle Randall is going to be trying to teach you. That's always my goal for you. I used to be broke and bankrupt and living in a basement. Today, I am a multimillionaire. I know you can do it. I know it's not going to be sunshine and strawberries every single day, but I know if you lock in and if you invest in yourself and you listen to people that you trust, you really can be successful. I found people that I trust. I listened to them, even sometimes when it was hard, and I kept going, and I'm here. And that's why I'm trying to bring you here and beyond. Okay. We lift as we climb. Okay. So as I'm getting higher, I'm bringing as many people as I can with me, and I want you to come. That's why I invite you to the Grow Your Wealth Boot Camp. Of course, use code FINAL50. So let's talk about the do's and the don'ts, okay? Because like I said, I don't see a real estate market crash coming just yet. I don't see it for 2025. I've said that. And I don't see it yet for 2026. There hasn't been this many things going on with real estate. Remember, this new innovation is a big thing. We don't have a lot of new mortgage products. Okay. After that mortgage crash, mortgage lenders and that whole space, they do have DSCR loans, what I want you to get because they're in your business's name. But those are actually business loans. That's what I'm saying. Most of the better money to borrow with the lower interest rate and the better terms are in your business's name, not in your consumer's name, not in your own personal name using your social security number. Like literally starting a business using an EIN is going to get you much better funding, better flexible terms. And if you ever, anything ever goes wrong, you can do like former presidents and just your business goes bankrupt, not you. Okay. So you're protecting yourself and your assets. That's what I want you to always do. But let's talk about what to really do. Let's some do's. Okay. So, really, really important. All right. In a market, in a real estate market where there is going to be a market crash, I'm telling you, you have to increase your income. You have to increase your income. You have to create multiple streams of income. This is always going to be the answer for any crash, any economic downturn, any type of financial strife or struggle that you are going to go through. If you have a high income and you actually create multiple streams of income, you will start to shield yourself from these things. Okay, because you have diversified money coming in, you've kind of picked your horse and you have multiple ways for it to come in. Okay, so you always got to be about increasing your income. You always have to think that. Stop thinking saving money. Stop thinking paying off debt. I love you so much. I'm a multimillionaire. Stop thinking about that right now and focus on increasing your income. Okay, don't just increase your expenses, but if you can create more money for yourself, you now have more money to invest. You have more money that you can borrow. You have more savings. You have all of it. So you want to increase your income. That is a really, really big do. Okay. Another really, really big do when there is a market crash or if you suspect that one is coming or anything whatsoever, you should be buying assets. Okay. When a market crashes, that means those assets actually become cheaper for you to buy, right? You get that. So when the market crash happened after 2008, there were people that were Wall Street actually started buying them up like crazy and they made billions of dollars. So you want to be buying assets. You always want to be buying assets. That's not something you're timing and watching. It's not like double dutch where you're waiting. Do I jump in? Do I jump in and buy assets and buy homes and buy stocks and buy businesses? You're always doing that. That's always what you should be lookout. But that's why you have to increase your income because you need to be buying things that are going to make you money, which is another thing that I teach wholeheartedly. And we'll go into real details, what to put on applications, what not to say. We'll go through a lot of that and all of it at the Grow Your Wealth Bootcamp. So go to growyourwealthbootcamp.com and use code FINAL50 so we can talk about what type of assets you should be buying. I literally go into that in very, very deep detail. And like I said, it's a full day of training so we can get really specific on how you find those assets too, how they will bring you in money every single month, like Noelle Randall, and get you to a status where you're multimillionaire, you're kind of doing whatever you want to do. And these 4 patterns you can easily sniff out and make money with. All right, let's keep going. So you're going to buy assets. All right, especially ones that are discounted. And then last but not least, you are going to invest. This is the perfect time. If you think a market crash is coming, you should be investing in the market. That helps you. That helps you. And I don't mean invest with speculation like, oh man, tulips are the thing. We should be buying tulips. No, investing most likely in yourself. One of the things when I was broke and bankrupt and in my parents' basement, I started going to classes. I started going to seminars. I started going to conferences. I started going to workshops. I started investing in myself so that I could learn a skill that I could now use year after year after year to make lots of money, to create generational wealth, create multiple streams of income. Just even start there. Forget about the generational wealth. For some people, that is just way too far of a bridge. Okay, cool. Just to increase my income. Okay, give me some more money. I was able to do wholesale deals where I was picking up $5,000 a month every single month. So even that extra $60,000 a year got me where I could quit my job really easily. And now I can do this thing full time and make tons of money. So you want to invest. But more importantly, if you don't know that you don't have a good skill, invest in yourself and learn something. All right. Again, I'm going to invite you to the Grow Your Wealth Bootcamp. This is the last one of 2025, and there are some amazing ways to invest in yourself. I have people that I've heard some of. If I could just read to you all of the amazing stories. I have a lady that started a construction company, multi-million dollars. I got a lady that started a bag company, and then I have another student that's like trying to do luggage now. And I went back and found all of my students. She has started these bags, and she's making all of this money with these bags, similar to that other lady that did the rubber, those rubber beach bags. So again, you have a talent, a gift, something that you want to do. I wanted to do real estate. I thought I needed to be rich. I did not. Once I started picking up properties that people were losing because of foreclosure and bankruptcy and all of the other stuff, I was able to get really rich flipping houses, okay, and flipping contracts. I want you to do these same things. So it's investing in yourself so that you then can invest in the thing that you do. So now let's get real serious and talk about some don'ts, because market crashes, they scare people. Go ahead and get those likes up. Come on, I need y'all to like. Even on TikTok, I need you to like. I only got 52 hearts on TikTok. Come on. I need over 100 on YouTube. Go ahead, like this. Go ahead. Thank you. Come on. I have over 200 and some almost 300 people on just the YouTube. If all of y'all just click right now, just click the like. Go ahead. If you're on mobile, you can just tap the screen. Thank you. That really helps me. I really appreciate that. Seriously. Go ahead and like this. I love that. All right. Now let's get to the don'ts. Okay. Because this is super important. You don't sell what? Do not sell your stocks and your assets, even if they start to go down in value. Do not do that. Like, for example, the market starts to crash. Let's just say the real estate market is crashing, and I got 10 condos, which y'all know I do. I'm not gonna sell them because the market starts to go down. I'm gonna hold on to my asset because this is cyclical. It will go back up. That's not the time to sell, is when everything is crashing. That's when you hold on. Hold on. So we're not in a market crash right now, but I want you to understand unequivocally, do not just start selling your assets and giving them all away because the market is crashing. That is what got me broke, bankrupt, and living in my parents' basement. I let them take the house that I was living in. I got foreclosed on. I let the sheriff come to my house and kick me out. That house now is worth nearly $1 million. That house that was $300,000 whenever in 2008 when I got kicked out of it. I still look at that house value because if I could have kept it, I would have changed. If I would have just held on, I could have changed a lot. But I needed to go to the basement because I needed to be humbled and I needed to learn. Okay, I wasn't as smart as you here watching this. I needed to learn. So do not sell your stocks and your assets during a crash. Don't do that. Hold on to them. Get tied to a network. That's another reason why I invite you to the Grow Your Wealth Bootcamp. You really want to get tied to a network. There are people that will buy your house. That's an investor. That's not going to just so it doesn't have to go back to the bank and you lose your down payment and you lose all the money that you've been paying for all of those months. You can work with an investor. They can give you money to move. There's a lot of things you can do when you're tied to a network, even if you get in financial distress. So I make a lot of money from other people's financial distress, but my network and my group, we're actually able to help each other so that we don't all go bankrupt and do things like that. Okay. So think about that. Do not, y'all got that. Do not sell your stocks and your assets when the market starts to go down. That's the worst thing that you could do. You're starting to lose money, and know that you can hold on. And that's probably our biggest, if I'm being honest, and I'm just taking a second and talking to you, that's probably the biggest problem in our community. When things start to go bad, we panic, we sell our stuff, we give away our wealth. We're not going to do that anymore. You with me? Okay. All right. I take a minute to be serious right there. All right. So here's what you don't buy. You are not going to buy, sorry, oops. You're not going to buy gold. I love you so much. When the market starts crashing, people try to buy like tangible assets, all right? Assets that they think are going to make them a lot of money. And for some reason, there's this idea that the market is crashing. I should buy gold. No, you can buy gold whenever you want to, but don't think because the market is crashing and our economy is not based on the gold standard that buying gold in a market crash somehow gives you this stability and this security. It doesn't. Owning gold, how are you monetizing that? Why I like real estate and I love y'all so much and having your own business is because that's cash flow. That's money coming in. If you have a business, even if it's a landscaping business or a hair business or a copywriting or photography business, that's cash flow. You want that. You want a way to generate income. If you buy gold and you hold it, What are you monetizing? So gold is not the thing. I love y'all so much, but gold and metal and precious metals, not that I don't own any, but that's not what you do when the market is crashing. And so many people love to go buy gold because the market is crashing. I don't know where they got that from. I've seen some of the commercials, but again, they're just trying to sell you gold. So, yeah, no. And then last but not least, here is what you are also not going to do. You are not going to time the market. So this is not about, oh, a market crash is coming. That's when I'm going to buy real estate, or that's when I'm going to buy a house, or that's when I'm going to buy stocks, or that's when I'm going to start my business. You are not going to be able to time the market. None of us are psychic. And even with these four patterns that I gave you, I still am not a psychic to tell you on Monday at 2 o'clock that's when the lowest prices of houses are going to be. That's insane. It's a silly idea. So you are not, do not try to time the market. The best time for you to become the person that you want to become and have the business that you deserve and the money that you deserve is right now. You don't need to wait. You don't know what tomorrow's hold. You could die tomorrow. When are you going to live? Answer that. Thank you. Amen. I saw somebody type amen. Right. So again, come to the Grow Your Wealth Boot Camp. Get your tickets at growyourwealthbootcamp.com. Use code final50 to save 50%. We're on our final tickets. This is the last one for 2025. A lot of new content about how to get business credit, how to use that business credit to get income generating assets, how you can make a lot of money and set up your business where you can get a lot of funding for your business. I love market crashes. They actually create opportunities if you have money for them. So if the stock market crashes and stock prices go down, if you have money, then you can buy stocks at a discounted price. If the real estate market crashes and real estate prices fall, well, now you can buy them at a discount. This goes on and on and on. Distress is okay for an entrepreneur, for an investor. But for you, for myself, me and you just talking, it's all about increasing your income and increasing your cash flow. And that's what I teach at the Grow Your Wealth business. Sorry, the Grow Your Wealth Boot Camp. It's all about your business. It's all about your investing. So get your tickets, growyourwealthbootcamp.com. Use code final50. These are the four patterns that always predict a market crash. They're always there, every single one. Again, Noelle Randall has more school than you could ever imagine. I got a bachelor's degree, got one master's, finished that one, got another master's, always going to classes, always teaching and trying to teach you, and not trying, actually, I hate that word trying, and actually teaching you the things that I learned, cutting out the fluff, getting right to the point without all of that other CDS and this is that. No, just get to the point. That's why y'all love me. I get directly to the point. And the point is, there are some patterns for certain markets. And again, I don't mean an entire economy is about to crash, like the entire market itself. But let's be clear, there are some markets that have a lot of this. Like I said AI and crypto. AI and crypto to me have the number two and number three. One, two, three, just like right there. Rampant speculation, like that's all AI and and freaking crypto is. It's all speculation, lack of regulation. We already know they don't regulate crypto, and then when they try to, they stop that. New innovation, obviously, AI and crypto are new innovations, and then the excess debt. So a lot of people borrowing a lot of money, not necessarily for the crypto thing, but for the AI. So I'm watching those markets, but the real estate market has just been just kind of flat. It hasn't been, it's not a crash, it's not a boom, just really flat. And I've enjoyed that, honestly, because like I said, I'm always in it. I'm not looking to just do one real estate deal. I have an entire business, and that's what I'm always encouraging you to do. Have an entire business, have your website, have an EIN, have a marketing plan where you're sending and driving traffic to your website and bringing in customers to your business. You're using some of your revenue and you're putting it aside and you're buying assets. So not only do you have your cash flow from your business and the things that you're doing, you also have your revenue that you're generating from your business. Most people can't generate enough money for their business because they don't have enough capital. You can easily set up your business the correct way where you can get business funding. Like this is not fairy tale land. Like you literally could have a business credit and buy assets with it and do it over and over and over again because you can have as many businesses as you want. Noelle Randall runs over 8 different businesses, including a nonprofit. I have two like they're like little wallets, like that whole 64 credit cards. I have 2 of those full of business credit cards. Okay, in different businesses name. I have credit cards that have no limit on them. I have business credit cards where you could charge $300,000 on the card, and I can actually, there has no limit. I can charge $1 million on it. I've charged hundreds of thousands of dollars, but I use it strategically. In many cases, I've used business credit cards for earnest money, for down payments. Okay, to do inspections or home appraisals, like to get more real estate, I'll use my business credit. To grow my coaching business, I'll use it to run ads. I'll use it to rent venues, to do events. Like there's so much you can do if you have access to capital. And if you know what's going on and you know the do's and the don'ts. Okay. And so let's talk about this. You have to invest in yourself. And I have a video that I'm going to come out on different ways to invest in yourself. But more importantly, think about where you would be if you locked in and you just focused on you and your business. Where would you be? I know for me, I got really far when I finally locked in, focused in on what I would do. And that's another reason if you come to the Grow Your Wealth Boot Camp, as a bonus, I'll give you a copy of my ebook, Pick a Horse. You get that absolutely free. And this book I poured my heart into is an absolute Amazon bestseller. You see that little tag right there, Amazon bestseller. I poured my heart into how I really focused in and said, okay, this is my horse. My mentor said, pick a horse. And at the time I had like hair extension business I was doing. I had, I still do my tea, but I had to put that down to the side. I had a lot of little dabbling, little side hustles that I was doing. And she was like, you need to lock in on one thing, get that to 1 million, and then we can add some more things in. And I did that and it worked for me. And literally though, what took it to even, tens of million has been business credit. Like once you learn how to make $1 million with something, while even really successful entrepreneurs absolutely love Noelle, because I can take your $1 million business to a $10 million. If you even think about it, if you're making $1 million a year and someone gives you another million for ads, for inventory, to hire people, for merchandise, for logos on shirts, to upgrade websites, things like that, now you can easily increase your revenue. And that is the game changer that most of us just don't know about. Why I'm going to keep screaming from the top of the mountain. Let's build our businesses. Let's be positive about our businesses. Stop telling people to get a job. Let's be positive about each other's businesses, support each other in each other's businesses, help us get funding for our businesses, not just borrowed money, but also grants. If you set your business up properly, that's another thing we teach you at the Grow Your Wealth Bootcamp, is there's access to all of these grants and we give you that as a resource. So again, I'm about to get off of here because I love you so much. I've showed you these patterns. I see that most of you see, like it's income and cash flow. I've seen that in the comments, income and cash flow. You guys know that's the important thing. So come to the Grow Your Wealth Bootcamp. Use code FINAL50 to save 50%. This is the last one of 2025. I want to see you there. We're going to talk about what to do to make a lot of money. All of these crashes, these are the patterns that always happen with a crash. So one will be coming in certain markets, and you can make a lot of money if you have some money on the side. But nobody said you have to save that money or that it has to be your money. It could be money that you borrowed in your business's name that you could use to buy a lot of assets at a low price. And that's what I'm going to teach you because that's always where the wealth is. All right. So just want to make sure you get that. Get your tickets, growyourwealthbootcamp.com. Use code FINAL50. Why? Because I want to make sure that you have all of the knowledge, all of the tools, and all of the resources that you need to be successful. This is Noelle Randall. To your success. Bye bye.